think you're seeing nationally that this trend towards higher GDP growth and higher sales really driving firms that have been delaying their hiring plans to actually move into hiring mode. In the context of higher unemployment in Colorado, one of the things that happens with the unemployment rate is it typically goes higher as firms start to hire, because people who have been out of the workforce start to come back in to the workforce, and they see better opportunities, if you will. And we're actually seeing that in national surveys as well. We're hearing that employees are willing to look for other jobs now while they're working at a much higher level than they have been over the last several years. They're feeling very confident about their current employment situation and actually seeking other opportunities outside of their current situation. So all of those things, I think, are signaling just greater confidence in the employment picture. In Colorado, the recovery really in terms of starting to see positive job growth occurred in the fourth quarter of last year. We started to see sort of year-over-year positive job growth, and that has continued through the first 2 months of this year through the February data, which is the most recent data that we have. And based on that data, the existing data, it looks like areas like leisure and hospitality, natural resources, which is currently called mining and logging, but those areas are doing well. Professional and business services are doing well. So there are some areas doing particularly well. Overall, though, the recovery has been broad-based. With the exception of a couple of sectors, we're seeing job growth. So I think that Colorado certainly lagged the national recovery, but it looks like over the past, say, 4 or 5 months that we're into the growth mode again. Our loss of employment last year was greater than the nation's loss of employment percentage-wise, so we definitely were lagging in terms of the recovery. But I think Colorado's in recovery mode right now. We're being held down a little bit by, frankly, the loss of government employment and the financial situation of government in general, that sector. Well, I certainly think there's a concern. We've been talking about it sort of publicly for the last couple of years, that the population growth was very strong through the last decade compared to other parts of the country, and we had essentially no job growth for a decade, and statewide we had basically 0 jobs for a decade. And so more and more population, about 800,000 additional people in the state, and no jobs associated, job growth associated with that. So it obviously creates a problem in terms of your unemployment rate and just your overall economic picture. When the unemployment rate was revised higher based on population growth, I actually think that's actually a good thing. It signals to the rest of the country, like, this isn't the easy place to get a job, and so it'll probably slow down some of the flow into the state of people from other parts of the country, and that'll be good until we get our economy a little bit further along. So I think the reason why they're at very high levels is, first of all, the sustained GDP growth has really led to more and more sales. But I think the profits piece is that we're starting to see businesses able to pass on some of the cost increases they were absorbing. Everything from restaurants raising menu prices all the way through food, through other types of things. We're starting to see more of those price increases that have occurred getting built into the sales price. So that helps them with their profitability. During the downturn, businesses were eating a lot of that cost increase because they didn't want to lose sales, and so that erodes your profitability. And now they're seeing some of that recovery come back. In terms of hiring, it's certainly higher levels of profits and higher levels of productivity in the economy. Ultimately, you start to see declines in productivity, and then you start to see the hiring. And the most recent surveys that have been released by ADP this week indicate that there's broad-based hiring going on, and sort of the strongest hiring is going on with small business. And I think that's when you start to see the conversion of profits from small business sort of more quickly turn into hiring of employees. So we're seeing that right now, and I think we'll see even stronger pace of that in the next quarter, in the second quarter. Many of those events were going on during our survey period. Certainly the events in the Middle East were going on in a big way, and the national budget situation in terms of the lockdown of the federal budget, and all of those things are creating uncertainty, and we still got very high readings, and nationally we're seeing very high readings in business confidence. But could something like this turn into a black swan? Sure. I mean, something that really turns out to be more significant than we had anticipated. Right now, don't think so. Think there'll be slowdowns in certain industries, but don't think overall growth is going to slow in this process. Well, it was roughly 70% through budget cuts and 30% through tax increases. Those were the averages, and as we provide in the actual release, it's sort of a chart of that. I was a little surprised that there weren't more people at the extremes that would say do it all through budget cuts or do it all through tax increases. And the vast majority of business people were sort of in the middle. It has to be a combination. That probably means that we will have more success at passing perhaps some changes in tax policy to do this within the state. I mean, if the business community is saying that that they're willing to support some level of tax increase in combination with the spending cuts. The other interesting piece of that is we always talk about K through 12 and higher ed and the different pieces, and based on the weights they put on what they were going to cut, education was by far the lowest weights. Higher ed and K through 12 were the lowest weights, and they suggested the cuts be more heavily distributed to health and human services. So it was really perhaps a higher recognition of the importance of education system, all of the education system, to business and to the future of business. Obviously, a continued upward trend in all of the indicators in terms of being positive or expansionary. Sustained growth, if you will, in the state economy going over the next quarter and even beyond in terms of the strength of some of these, and really being fueled by higher sales and profits. So that's fueling a lot more of the confidence, or backing a lot more of the business confidence that's out there, and clearly turning now into plans to invest in capital equipment, but also to invest in people, and very important for the long-term recovery of the state economy.